Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as all the market strategies that you need to follow on this first first session of 2082 Samwat year. Now the Nifty, remember, will have this first session after midweek holiday that we have already had, and Tuesday's session that was a 1 hour Muhurat trading session that we managed to end in the green, continuing with our 8th consecutive Diwali Muhurat trading session on the positive end. Now remember, with that move that we have seen over the last 4 to 5 odd sessions on the positive side on the Nifty, the index is now 400 points away from the record high levels after ending the special session also in the green. Now remember, the gift Nifty is today also indicating that it may open about 400 points higher in trade, and therefore we could be inching closer to or starting our session near our all-time high levels of 26,277. Right now, if you see, the markets have seen some kind of a dip from that 400 point of a gap up that was initially getting indicated. Now we are indicative of about 25,868. That's a mild positive start for the morning session today. Now, of course, when we are also looking at several cues that the markets will be reacting to, remember, over the last couple of sessions, sentiments would have also got a booster shot coming in from the US President Donald Trump, who was celebrating Diwali at the White House and has also stated that India will reduce purchase of Russian oil and that there could be optimism about the trade deal that could be culminating soon. Now, this is in contrast to his own previous statements on India completely stopping the purchase of Russian oil. Now, India has definitely acknowledged that the two leaders, Prime Minister Narendra Modi and US President Donald Trump, have actually shared a phone call on Diwali greetings, and yet at the same time, we still do not have any confirmation from Indian government on whether we are reducing our purchase of Russian oil, whether this has been the sticking point and this is on the ease or not. There are also some reports, by the way, which are also indicative of some H-1B visa relief that actually will bring back the focus on the IT stocks yet again today. Now, what has happened overnight? The US markets have closed lower following a busy day of corporate earnings, renewed US-China trade tensions, US government now shut down entering the 4th week. Remember, the tech-focused Nasdaq has fallen by about 0.9% in trade. Dow Jones Industrial Average has dropped by 0.7% overnight. S&P 500 has also slipped by about 0.5% in the trade right now. When we also look at the Asian markets, they have been trading lower right in the morning following Wall Street's declines on the concerns about US and China trade tensions. Now remember, last checked, Japan's Nikkei 225 index was about 0.1% down. Hong Kong's index was about 0.2% down in trade, while South Korea's Kospi index also fell by about 0.09% in trade. Now, what has also happened is that the foreign institutional investors have also turned net buyers in the cash market over the last few trading sessions, and that's going to be again the focus point of this new Samwat as well, as to whether FIIs are considerably and sustainably coming back to the Indian markets. IT stocks, like I pointed out, will definitely be in focus in the session today. We will also watch out for emphasis over the proposed buyback, where promoters do not intend to participate. Emphasis promoters, including Narayana Murthy and Mr. Nandan Nilekani, will not be offering their shares in the buyback process that was first announced in September. Now, remember, the company plans to buy back about 18,000 odd crore rupees. This is the largest buyback in a decade, at a time when most of the IT stocks have been reeling under pressure due to the weak macro environment and uncertainties arising from tariffs and all these policy uncertainties as well. There will be also some earnings for the day included from HUL, Laurus Labs, Colgate and Palmolive that will be in focus, and we will also focus on auto companies as they are now coming out with the data as to how this entire festive season from day one of Navratri till Diwali has panned out for them, with a lot of sales that have taken place. Let's in fact first welcome our guest on board. Mr. Devin Choksi is now joining in on the program with us to share with us his views on the day one of the new Samwat. Warm welcome to you, sir. Thank you so much for joining in. Wish you all the greetings for this new Samwat year. Do help us understand your first thought. We have finally seen some optimism come back to the day state over the last few sessions. That again is raising the hopes that we might be, closing in on that record high level that we've seen for the first time in calendar year 2025. We are at a year high on the Nifty index as well. What is your thought? Do you think the worst of all those volatilities that we've seen in the past Diwali to Diwali kind of returns is now behind?
season's greetings and wish best wishes for the new summer years, Sakshi,
Thank
to
you.
you as well.
Thank you.
Uh, well, I think between the last Diwali and the Diwali which we have seen day before, I think the important thing which has happened is an element of uncertainty in
Yeah.
the global environment. And if that is coming to an end, which we would all like to believe that it is, because on one side, President Trump is claiming that he is resolving all the war-related situation, he is also simultaneously stating that I am also trying to clear all the tariff-related problems, I think, which otherwise I think has created ruckus in the system. I believe that I think things are now getting solved as we see it. And given that situation on the other side, we are having Indian economy, which is basically showing a good amount of growth orientation. On one side, you have got the lowest inflation, which we haven't seen in decades.
Yes. Yes.
On the other side, we have got the lowest amount of interest rates, and which is further promising to come down. At the same time, government is a big time spender in the economy in form of creating the infrastructure assets in the economy, be it rail, road, railways, water, or the power ancillaries, whatever you call it as. They are also pumping in the economy with a good amount of PLI schemes so that foreign direct investment gets into the system and we become export oriented. Creating the agreement, the free trade agreement with most of the nations, which is again showing the visibility. So these are some of the equations which I believe have never been there. I think we haven't seen these kind of equations before in our lifetimes. They are all coming together. And fortunately, the markets haven't done enough. Nifty 50 stocks have remained, I think, around 20 times price earning ratio. If you consider on a forward earning basis, I think they are available at around 18, 19 times price earning ratio. So, from a perspective of looking at the market, from a perspective of looking at the economy, from a perspective of looking at the global economy and our position in that economy, I think all in all put together, all equations are suggesting that the stock earnings are likely to go up from current levels, and that's where probably are seeing the buying opportunity. One last point I think which cannot be forgotten: the rupee has done whatever it had to do as far as the thing was journey of rupee is concerned in a shorter span. I believe that I think 85.5, 86 is a good level at which I think rupee gold promises to come back. Should that happen, I think you are going to see huge amount of money coming into the country because most of the traders I think would like to take the advantage of currency. Probably I think would enter into the markets today and probably I think even take the advantage of currency apart from earnings advantage with the price appreciation. So I believe that I think 26 promises to be a better year compared to 25 that we have seen.
Okay, so promising year ahead, and that's the clear hope. Along with all the points that you mentioned, Devin sir, how are you looking at some signs of positivity also coming from the US when it comes to hopes of a trade deal being signed between India, sooner than expected? Also, because this has been in limbo for a long time now. Also, help us understand when it comes to the kind of softened stance that Donald Trump is now displaying on India, be it on the point of the Russian oil that has been a key sticky point, or on the fact that there will be lower tariff, those kind of statements that are coming in. Thirdly, on India's part as well, there are some signs that Donald Trump has already marked out. We don't have an official government voice from India yet confirming it, but Donald Trump is saying that we have already started to reduce our Russian oil purchases, and that is good enough for them, at least for now. So how are you looking at all of these statements? Should there be a trade deal that happens sooner than later, what will be the reaction on the market, sir?
Minus India and China, Sakshi, I think in this first season in America, it would be a disaster in their economy. Frankly, I think if you keep all the shop floors empty and if all the stores are basically not having the SKUs filled up with the products, probably I think you're going to see the never before seen kind of a situation in America wherein the American citizens will come on the road and will teach the lesson I think which is required to be given here in this case. Unfortunately, I think this is a situation which is happening at the cost of I think the US economy itself. So they cannot sustain it for a very long period of time. I think the kind of pressure tactics that they have built in. In my viewpoint, I think whether India buys from Russia or some other country, I think that should not be the factor in which I think we should be governed or controlled. If we find ourselves comfortable buying oil from the other countries, I think we will. And if we find it from Russia, we will. Imagine a situation that you put a sanction on Russian oil and India stops supplying fuel to the Western world. And that is where I think you are going to see major challenge. Along with the challenge happening in America, I think you are going to see the fuel happening in the European region as well if we stop supplying the refining products. So in my viewpoint, I think it is not as easy. This is a pressure technique. In my viewpoint, I think things are getting resolved. Maybe I think sooner than later you will find the answer to this particular situation. Cannot sustain for sure. And given that kind of understanding that we carry, we believe that I think this particular situation is favoring India. So certainly, I think if you are looking at market and without becoming political expert on the subject, I believe that I think the market is giving a fantastic opportunity for the investors.
Okay, pre-open trade is in front of you. In contrast to the big expectations that we had early in the morning, we are seeing just a flat start, 25,924. But I hope this will improve for the better as and when the pre-open trade also settles by 907 or 908. Remember, we are now inching closer to the 26,000 mark. Nearly a 90 point of a jump is what we see at this point in time. That's indicative of a slight gap up in the morning. So now you have the 26,000 mark in front of you. So it's slowly and gradually improving with every second passing by half odd percent higher. Hopefully we'll be above 26,000 when we open up, but remains to be seen how soon do we climb up and climb all the resistances that we've been facing. Remember, it's been a long haul since we have been trying to climb above 25,000, 25,500. This is for the first time that we will be seeing 26,000 come in. What remains to be seen is whether we will be able to sustain above that mark or not. Devin sir, help us understand when it comes to the key themes that you believe are likely to be outperformers in the new Samwat year, where our focus should be concentrated on. How would you be looking at that aspect? In the closing of 2081 Samwat, we've actually seen a lot of focus on the consumption oriented themes. Large part of our conversation, we were speaking to you also on Diwali. A lot of analysts have been talking about this consumption oriented theme to continue in this new Samwat year as well. But what is the best way to play this theme, sir?
For industrial consumption activity to sustain, the metal commodities is the one I think which one could possibly I think look at.
Okay.
Along with the engineering companies which are providing the infrastructure-led execution solutions. I think those companies are probably the right choice to buy. So if I have to buy the investments, my choice would be to buy the capital goods. My choice would be to buy metals commodity along with. And my choice would be to include some of the large corporate banks who are basically growing faster than others as far as I think their ability to lend is concerned, particularly retail lending. Because this is a consumption theme which we cannot rule out. And to drive the consumption theme, you require the lending institutions, the NBFCs and the corporate banks who are basically growing smarter, I think, in this environment, lending it to individual customers, consumers. In my viewpoint, I think you can also look at the real estate as well as auto and auto ancillary. Because if on one side we have industrial consumption driving the capital goods and the metal commodities, and on the other side, if you have the individual consumptions driving the real estate as well as auto ancillaries, in my viewpoint, I think a perfect mix would be to bring along with some of the good large corporate banks who are having a position to generate significantly large amount of growth on the area. So it's a good combination to consider as far as investment is concerned.
Okay. Devin sir, also give us an understanding of how are you looking at the earnings that have started to pour in already. A large part of IT sector earnings are already out. Some of the other companies from other sectors are also reporting their earnings. What do the early indicators tell you, sir? Is a bottoming out of earnings is already under way at this point in time? And how would you look at recovery within the outperformers coming in? Will it be this quarter? Will it be the next quarter? And how soon are you penciling in that, sir?
Yeah, I think the quarter one to quarter two have been pretty satisfactory, and I believe that I think quarter three, quarter four for the financial year 26 is going to be better than what we have seen in the last full year, that is 24-25, and also in the first half of 25-26. So certainly second half of 25-26 financial year remains extraordinarily promising, largely because of the facts I think which we have discussed up till now. In my viewpoint, I think the industry, the corporate sector are having one or two listing advantages. On one side, I think the demand scenario is gradually ramping up. And in this festive season, the amount of money which consumers spend is bound to get reflected into third quarter results and the fourth quarter results going forward. So yes, I think there is a promise for better earnings in the third quarter and the fourth quarter. Second most important point, I believe, is the cost of funds. If the cost of funds is remaining lower, then probably corporate sector will start reporting relatively more better performance and at the same time ability to execute the projects faster and better. That is what we look at it. And not to forget
Sure. Okay. All right. I think we'll get back to the link with Devensa. There's some technical issue that we are facing right
getting
now.
significant amount of
Okay.
trust.
I can hear you now again, Devensa. Yeah. Please go on.
Yeah, so the government, I think, is the spending. The government spends money, and in this coming fourth quarter, the budget is going to be spelling out even further clear intent of the government to spend extra money on the because they have been successful with reduction in the tax rate. They have been successful with that. I think higher amount of consumption. They are successful with collecting higher amount of incidental tax because the consumption is increasing. So overall, the government formula is working. They bring down the cost structure in the economy and allow the consumption to drive the economy on a sustainable basis. That's what I think we are likely to see. In fact, I think if you ask me the results so far in the current quarter, I think it's a trailer which we have seen up till now. We are likely to see the full movie coming up in the third quarter and the fourth quarter, where the large amount of earning growth can be experienced, I think, going forward. So even the cost structure is also coming down. On one side, you see the even though marginal, the power cost is coming down in the industry. Even the logistic cost is coming down in the industry. Of course, I think all the commodity costs, particularly the metal commodities, food commodities, the cost structure is coming down. So overall, I think that impact is going to be there in the margin going forward, and we remain distinctly confident about the possibilities going forward.
Okay. Devendra, for those who had, heavy tilt towards gold and silver in the previous Samwat, they would have laughed their ways to the banks now. This time around, what's going to be changed? Those who are facing, I had asked you this question even on Diwali day, that those facing this recency bias and FOMO and are now entering gold and silver towards the fag end of this rally, at least for now, till the last Samwat. What should they remember?
If you are buying expensive assets, I think you must have visibility of generating a sustainable rate of growth in that expensive asset. That is how I look at the bullion assets. Currently, bullion assets have gone up largely because of the shortage of supply ahead of, I think, higher demand. And this demand is not coming from consumer alone. This demand is coming largely from the central bankers in the world. They are the ones who are as against buying the dollar assets, they are buying the billion assets this point of time in their treasury. And that's the reason for which I think the short supply commodity is driving on the prices. Uh, well, I think one cannot be speculating on this subject beyond the point. But if I think the central banker decides not to pursue further buying into the bullion commodities for whatever reasons, I believe that I think we will be seeing the reverse of what you have seen in last 6 months as far as I think the performance of gold and silver is concerned in coming 6 to 9 months. So let's not speculate, but maybe I think this is a reality. Any assets I think which is driven purely on the supply side constraint, if the prices have gone up, I think it cannot hold for a longer period. It may probably I think have to adjust on its own. We will
Okay.
not be speculating beyond the point on this.
So, sir, bullion versus equities, what will outperform in 2026? Do you think equities will have a good run up this year vis-a-vis the bullion?
Far better chances, of course. I think Nifty 50 stocks are likely to give 15-20% appreciation. Though the bullion asset, one can argue that it has given 100% appreciation in 6-8 months' time. But I think to expect that rally to continue from here on is a good call. I am not an expert on that part. But I believe that equity on a sustainable basis, I think, is promising to give you around 18 to 20% return for at least next 3 to 5 years on a from current base. So that is what I think we like to buy into, given that promise.
So, what about the mid and small caps? Since you did talk about the Nifty earnings and the Nifty kind of performance that we can expect, do you think mid and small caps will also make a comeback?
They will have to do either the time correction or the price correction.
Okay.
Mid and small caps are going to remain vulnerable largely also because of the fact that there are many public issues, IPOs are coming up. And as the public issue investors are, IPO investors are, including the institution, they flip the investment moment. I think they see the new paper. We have seen this situation in case of the issues like LG Electronics. We have seen this situation when the recent one Tata came in, Tata Capital came in. So I believe that I think most of these IPO investors are flippers, and they would like to flip and buy the new IPO, new paper in the market by way of selling some of the expensive mid and small cap companies which are listed in the market. So not a very good news. If they are quoting expensive, they have to pass through the time and price correction. That is my understanding.
Okay. I also wanted to ask you, sir, as far as the IT companies are concerned, especially with Infosys now back in focus because of the buyback now where promoters are not participating. So probably the retailers will have higher chances of, their buyback shares getting accepted. How are you looking at this opportunity for retail investors? The fifth buyback from Infosys, the largest in a decade that we have. Do you think this will give a good opportunity for investors to participate?
It's a 2% kind of a buyback, I think, on your holding. So frankly, I think you are not going to get very significant amount of participation out of whatever holding that you have. And for that reason, I don't think that I think many seasoned investors would like to part with their investment. Maybe I think for somebody who is basically creating an arbitrage, I think they may try and clear out. But I think it's not a significant money either. I believe that the worst in the IT space is getting over, and probably we are likely to see some of the very smart upside coming in. In this quarter, leave aside, I think one company, rest of the companies have actually shown the ability to adapt the AI and bring down their cost structure. And along with that, I think they are delivering faster. The customers of IT companies are basically driving these companies on outcome basis as against I think earlier the service time and material service basis. So from a perspective of looking at I think future, I believe that some of these companies have taken early positions. I think they will be strong players to win large contracts. And if the normalcy returns to America, which one expects, in such situation, I think these large contracts will be a reality sooner than later. So remain cautiously optimistic about the prospects going forward for many of the IT companies.
Okay. Devin sir, we rarely talk about stocks, but it's the day one of new Samwat year. Any key kind of stocks that you're recommending to clients that you would want all our viewers to also focus on? What kind of stocks can really give a good alpha to the portfolios of investors?
Yeah, Sakshi, with a safe disclosure that we have position in the company which I'm going to talk about, and our clients also would have buying interest in the position in this particular company, along with our PMS fund. We like one company which is recently got listed, which is Jaro Education. This
Okay.
company is basically having a very systematic business model in education space. They are actually partners to IITs, the IIMs, the Symbiosis, the MITs of the world. And I believe that I think this is a company which is having an ability to scale up the business at 35 to 40% rate of growth, largely because their job is to bring in the new enrollments for these institutions. And in the process, I think they earn fee income, which is equal to what the total fee paid by the students to the universities. This is where I think this company is working strong. They are largely into the post undergraduate program, postgraduate programs, and skill development programs, as against K-12 programs. That is, they don't offer any kind of solutions to up to standard 12 kind of programs. So they are largely, I think, driven by that kind of opportunity. In my viewpoint, I think such kind of companies should be considered from the investment point of view for a long term. Never look at I think this company for 1 2 quarters, but look at I think 3 to 5 years. I think this is where probably the promises are remaining relatively stronger in such kind of businesses.
Fantastic. Thank you so much, Devin sir, for being with us on the
Okay.
program. Of course, catch you soon on conversations that will follow. But 26,000 is with us, viewers, for the first time after September 30th of 2024. You are seeing this level as the markets have opened half odd percent higher, 150 points above, and you can actually see 26,026 levels on your screen as far as the Nifty is concerned on day one of the new Samwat year, the Vikram Samwat 2082. So we are gaining some strength. Let's quickly look at the other aspects. The Nifty Bank also opening higher by 58,289 odd levels. You can see on that one, 282 points higher, half odd percent of an uptick even for the Nifty Bank. Let's also pull up the other sectors. All the sectors barring just about one small cap index. Rest all of the sectors are actually up. Look at IT is the top moving sector. Today about 1.8% higher, led by Infosys, of course, the top moving stock in trade today, 2.82% higher, followed by HCL Tech. That's also opening about 1.5% higher in trade. Shriram Finance, Tech Mahindra, Titan, Tata Consultancy Services, Bajaj Finance among the top movers. So at least half of the stocks of the top movers on the now top 5, top 6 names, you are looking at the IT names. But on the downside, you have Indigo that's lower. You have Max Healthcare, Bajaj Auto, Eicher Motors, Maruti. These are the stocks that are lower in trade. So some auto stocks that are giving up some gains right in the morning trade. Financial services, banks are higher, metals are higher. You can also see PSU banks also floating above in trade as well. Anything within the broadest index that we must mark? Yes, export oriented sectors. Remember the optimism that's coming in again with the hopes that US could be inching closer to clinch a trade deal with India. Positive statements coming in from the White House as well. Kitex Garments up by about 12.7%. Look at Gokul Das Exports, 11% higher in trade. You're also looking at many other stocks that are hovering higher in the broadest index. You have Avanti Feeds that's higher, Nitin Spinners that's higher, Indocount Industries that's higher. So you have all these export oriented names including the IT as well as the textile related stocks. Wellspun Living, look at 5% higher in trade. So right in the morning you have all those names. Vardhaman Textiles that's higher in trade. Himmat Singha Seede that's higher in trade. All of these stocks that are sharply higher in the session today. Let's also welcome another guest on board. We have Mr. Rudra Murthy now joining in to share with us his views on the markets on the new Samwat year, as well as how he believes the investors must be charting their new course. He's the research head of Vachana Investments. Warm welcome to you, Rudra. Thank you so much for taking the time out. Here's wishing you a fantastic new Samwat year 2082 to your loved ones, to all your team members at large, and to all your clients as well. Help us understand on day one, what is your thought?
Sakshi, good morning. Thanks a lot for having me in the show. And yes, last time when we spoke, I was telling market is not bullish. It will be super duper, super duper, super duper bullish.
Correct.
And it is easy today for anyone to say why markets have gone up, why always comes later, but money making always happens before. How will you make money by knowing why markets went up today and why it is up so many points, Nifty at all-time high, and this is because Trump told this, and this is because you had good Diwali sale, FII started buying. So all this why will not give you money today, but then calling that Bank Nifty will hit all-time highs very fast, much before the calendar year I said Nifty will hit all-time high, but it even surprised me even before December. Now in October itself you are seeing that. But now what next from here? I'm still very bullish on market, but then you have to understand this is not the day to buy. And if you are a person who is a short-term trader, this is the time to just book your profit if you have bought already. I'm not saying short this market. Don't do this mistake, come what may. This is not a market to short. But what I'm telling you is if you have missed the bus, have some patience, wait for some time, be in the right sectors and stocks. You have a lot of opportunity to make money in this market. Now you have no other way but to wait for a dip to buy. And if you have already bought and if you are a momentum trader, today will be a day to take some amount of profit. And let me tell you, still market has some more steam left, but it may not happen immediately after this kind of a gap up, but still markets have to move ahead. You have to now be very stock specific, sector specific. Still the move in broader market is yet to come. Money will always first flow into large caps, that into Nifty stocks, that into Bank Nifty stocks, then slowly it will move to broader market, mid and small cap. And let me tell you, the reasons are already clear, and which I have told repeatedly. This time result season is better than last time. This time the reforms what government did in the form of income tax rate cuts, GST reforms, whatever they did, all this has resulted in this move and what we have already seen now. And even from here market remains bullish, but you have to wait for a dip if you have missed the bus. And this is not a market to short. You have to be sector specific and stock specific. Still a lot of opportunity left in this market to make money only on the long side.
Fantastic opening comment there. Rudra, give us a sense of how are you looking at the export oriented sectors. There's a reason why I'm bringing this up. Look at IT, it's the top moving sector. Look at even textiles, they are also buzzing with a lot of gains. Remember over the last couple of sessions, what we've seen is that Mr. Donald Trump is again talking positively about a deal that could take place going forward because they believe that yes, India is slowing down their purchases on Russian oil, and this is going to be, again, we've had a phone call between the two leaders of the countries as well, and there is again optimism that once which was fading away, that the deal might well be in place sooner than expected, and all the export oriented sectors are buzzing again. So how are you looking at that from a trading point of view particularly?
Sakshi, live market, and also I have to take care of positions and then speak to you live. But let me tell you very, very clear, and I'm making a very bold statement right now. And I'm just putting my neck out and telling this, that yes, markets now will move towards IT. Even though the move has just started today, IT will start outperforming from here on. And definitely this is the time where you have to move from private banks to IT, and you have to move from Bank Nifty to Nifty. Earlier I was telling Bank Nifty will outperform Nifty, and I said Bank Nifty will hit all-time highs before Nifty, which happened. Now I am saying Nifty will outperform Bank Nifty from here on in the coming days. And most important, another statement I am making, IT, even after all this news, Trump, H1 visa, all that, IT will now start outperforming compared to private banks. Specifically, I am telling, in banks, you will not have HDFC, ICICI performing, and Bank Nifty will not perform like Nifty, and IT push will always support Nifty much more. And let me tell you, in banks, PSU banks will outperform larger private bank. And let me tell you, if you want to be in private bank, then go to some tier 2, tier 3 kind of a private bank, which can be your Federal Bank, RBL Bank, or it can be your Bandhan Bank, or it can be your City Union Bank. So these type of smaller tier 2, tier 3 focused private banks will do good. Insurance and NBFCs will do good. But private banks, especially large cap, this is the time to definitely see underperformance from them, and outperformance will happen surely from now on in IT.
Okay, since you're talking about IT, I also wanted to bring up Infosys in front of you because of the buyback news. The stock is also up by about 2.5–3% in the morning trade itself. Now, on the face of it, definitely the buyback appeals positive because this is at a price of 1,800 rupees per share. Vis-a-vis the current market price of around 1,500 odd levels. Now, we do also know that the promoters are not participating in this buyback. How are you looking at this opportunity? Do you think this is, there is a case in point for investors to definitely look at this buyback as an opportunity, or what would you advise on Infosys particularly?
100% Infi looks very strong, good to me even here, and I am telling IT will do very good. And specifically in IT, stocks like, for example, Coforge, Persistent System, Oracle Financial, all these good performers in IT which performed much better than IT index and few other stocks, relatively within IT basket, these stocks outperformed and they will continue to outperform. So stocks like, I repeat, Coforge, or even for that matter, Persistent System, Oracle. So these stocks will definitely do good in IT, and I'm still bullish even on other IT stocks, like whether it is Infosys, TCS, or you want to go for other ones which are there in the same sector, that will also continue to do good. But please be very, very clear that yes, IT will start outperforming from now on.
Fantastic. So that's a clear view coming in on the IT sector and on Infosys and the buyback opportunity there as well, viewers. I hope this is noted down well clearly. Let's also look at some of the other sectors that are buzzing. We have the banks that are clearly in focus. The Nifty private sector banks is also moving up higher in trade along with the other constituents too. We are looking at a lot of banks like Axis that's performing well at this point. Even NBFCs are doing well at this point. Remember, we've also had over the previous weekend a lot of these earnings come in. HDFC, ICICI, they all came out with the earnings have been positive as well. Rudra, how are you looking at the private sector banks amidst all these earnings that have been reported? Do you still see a lot of value here?
See, I clearly told already, Sakshi, that private sector banks for short term will underperform, and especially larger banks, whether it is HDFC or your ICICI, or even for that matter, Kotak and Axis. But if you want to pick one out of these stocks, relatively, yes, there is some more steam left in Axis Bank, but I will prefer PSU Bank. If you want to be in banks, I will prefer PSU Bank. And if you want to be in private bank, then I will prefer tier 2 and tier 3 kind of private bank. In that, my top pick will be Federal Bank, followed by your RBL Bank. And even there is a lot of news flow in terms of Emirates taking stake in RBL Bank. And also there are rumors running that yes, one more similar foreign bank might come and take in stakes with even Federal Bank. So for me, these second tier, third tier led private banks will do good, and not the larger ones of your HDFC and ICICI. They will underperform. If you want to remain in large cap, then go to IT. Forget whatever today's up move, forget what Trump told, forget what H1 visa and all that stuff. Still valuation comfort is there in IT, but this is the time, today is the time to get into IT, and I've already told the stocks in IT which can do good.
Absolutely, and there are several others that are joining the fray among the large caps as well as now mid caps. Now look at Birla Soft, 6% higher in trade, Newgen Software about 4% higher. So many of these stocks are also participating in this move. The stocks that are hitting a 52-week high. You have Axis Bank, SIAT, you have AU Small Finance Bank, you have Bank of India, you have Tata Consumer, Radico Khaitan, Titan. These are all the names that are actually buzzing in trade with 52-week high levels being seen on all across these stocks as well today. Let me actually come to some of the consumption oriented sectors with you, Rudra. Autos, FMCG, consumer durables. What's your clear thought here, and where are you keeping your attention?
Sakshi, definitely if you see the results which came from these sector, yes, stocks like for example Dabur, Hindustan Unilever, they can all definitely do good. But I will not prefer these as a great sector, because already the move has happened. Valuations are definitely a bit expensive here. So I will still say yes, they can give you market kind of a return and Nifty kind of a return, but you may not outperform or create that extra alpha in this sector. But yes, the GST push and the more money, the disposable income being higher in the hands of public will definitely take care of this particular sector. And few stocks, as I told, yes, Hindustan Unilever, Dabur, they can all do good. But for me, still, this is not the go-to sector. It will be a market performer for me.
Okay, fair point. I hope this is also well taken in. Let's talk about autos. How are you looking at autos, for instance, especially the newer ones? Ola Electric also I wanted to bring up with you. Over the last couple of sessions, the stock has been in focus, and of course the company has been in focus. The management has also been booked because of an unfortunate incident of a suicide that's taken place, and now there are some further developments that are taking place. Plus, on the news front, the company is now going to be considering fundraise proposal via share issuance and other means on October 25 as well. So that's also going to be in focus. How are you looking at Ola Electric and how are you looking at some of the other companies? I believe there have been a lot of data points that have come in for Tata Motors, for instance, how they have sold 1 lakh plus units, during this Diwali festivities already. So many of those data points will continue to flow in this week as well. How are you looking at that?
Sakshi, very, very clear. If you want to stay in autos, my number one pick will be M&M, Mahindra and Mahindra, and that will outperform the auto stocks, and relatively there is lot of strength both technically and fundamentally. Mahindra and Mahindra will be my top pick when it comes to auto, and followed by I will go for Maruti, and rest avoid. And Ola, I will even now say, why do you want to be into these kinds of stock which have destroyed wealth? You're only seeing the move from 40 rupees to might be that 60 rupees where it went, but the move from the top till those levels of 40, the pain whatever was there is still there. So what I want to tell you is, I'm not saying Ola is a stock which is so bad and it will not go up and it is not worth having. When you have a better stock like Mahindra and Mahindra, when you have a better stock like Maruti, and if you want to play the EV story, go with M&M, go with Maruti. Why do you want to go with Ola? So for me, definitely Ola is an avoid. And yes, at 40 rupee, okay, it was a value buy you might call, but at 60 it is already up 50% from 40. So for me, Ola kind of a stock, if you are a punt and a risk taking kind of a person and you want to bet, then you can go into it. But there is a wrong concept even in general retail public. You know what they do is, someone having, let us say for example 40,000 rupees, he will say at 40 rupee if I buy Ola, or 60 rupee, let us say I 55 rupee whatever I buy Ola, I get 1000 shares of Ola if I have about 50,000, let us say. But if you want to buy M&M you may not get that, you might get only 15 shares. So you get 1000 shares of Ola, but I get only 15 shares of M&M. But do understand, having 15 shares of M&M is more worthier than even having 1000 shares of Ola. Quantity does not matter, quality matters. You can have 10 lakh shares of, let us say, your stocks which have all gone to zero, like Kingfisher Airline. What will you do with having 10 lakh shares of Kingfisher Airline? So you have to understand, it is not the quantity but the quality. So just because you have small money and I get only 15 shares of Mahindra and Mahindra, for example, if I have about 50,000, but if I buy Ola, I get, let us say, 1000 shares of Ola. Please understand, 1000 shares of what is important. You can't compare 1000 shares of M&M with, let us say, 1 lakh shares of Ola or something like that. So having 10 lakh shares of Kingfisher Airline does not matter. So you have to be very, very clear. Even if I have 10 shares of MRF, if I have only 1 share of Berkshire Hathaway, you will be worth 5 crores in Indian rupee terms just by having 1 share of Berkshire Hathaway. That is enough. I don't want to have 50 lakh shares of Kingfisher Airline.
Absolutely. I think there cannot be a clearer view there as to how do you go about selecting the stocks, even if there is a sectoral tailwind that you are seeing. What kind of stocks will actually continue to generate value for your investment portfolios is of extreme importance, and how do you judge where your money should go? Let's also talk about, Rudra, what we've been talking a lot in the previous Samwat year, and that's the unstoppable rally in the bullion, in gold and silver. Now, what has happened is that gold and prices today are steadying themselves, but in the previous session what we've seen is that there was a sharp decline in both gold and silver right after Diwali. A 6% fall on gold, a 9% fall, 11% fall on silver ETFs. How are you looking at gold and silver? What do they hold in store? Or this sharp decline of one day that was probably a multi-year, sharp decline that we had seen. How are you looking at that? Do you think that has given and in fact an opportunity for investors who had missed out on the rally thus far? Or do you think this is indicative of that we are probably topping out as far as gold and silver rally is concerned? Right now, MCX Silver has opened near 1.47 lakhs. What we have seen is that COMEX Gold has slid about $350 plus from record odd levels, now at $4,100 an ounce as well. That's COMEX Silver now has fallen 10% from record, now trading around $48. So that's the fresh news that's coming in for all of our viewers to also take note of. Rudra.
Sakshi, I'll be crystal clear. I want people to watch our previous episode, which is already there in YouTube, on the show where I did it with you, and that was about 8-9 days back. And I made this statement. And even for the Diwali, when we had the show, I said gold and silver. In fact, I picked it as 2024 Diwali picks. Last year, 5 picks I gave. In that first one was cash. People were asking me, what is this cash as a position out of your 5 Diwali pick? I said, cash is king. You know, Singh is king is what is there outside. Rudra says cash is king. You should have cash for opportunity to deploy. And I was not happy last Diwali where my first stock pick was cash. And then after that, I said second is gold. And I said third is silver. And then two more I gave stock picks. But this time I'm saying gold and silver will give negative returns from this Diwali to next Diwali. I've made this statement. We did this not today. 8 days back when I made this statement, gold and silver was going up, up, up. But I said, I don't know when the balloon will get pierced. But I very surely know it will happen very soon. And I said it can happen max within next 15 days. And it happened just within next 1 week. And what I want to tell you is, even now, after the correction what you have seen in gold and silver prices, this is not the time to enter into gold and silver as an investment. This Diwali to next Diwali, beg, borrow, steal. Again, I am repeating what I told last time. Beg, borrow, steal and put your money into equities. And this Diwali to next Diwali, minimum at index level only you can see a return of 20 to 30%, and broader market will outperform and outshine. Mid and small cap, lot of stock opportunities are available. So for me, gold and silver is a clear avoid even after this correction right now. And someone who wants to buy it for consumption, you want to buy a jewelry for, let us say, a festival or for your housewarming ceremony, marriage, whatever it is, that is a different scenario altogether. But for pure investment, if you ask me, definitely these are not the levels to put money into gold and silver. But also let me tell you, because of de-dollarization, because of lot of central banks buying into gold, it is not retail public who have bought gold, and gold has gone up 60-70% in no time. And the same with even silver. It is the central banks and big institutions which have bought gold, and they have sold their dollars, and now more than dollar as a value of store, they have made gold and silver as a value of store. Industrial use for silver has gone up because of your EV use, because of your solar use, all that stuff, whatever has made silver to go up, gold to go up. It is not the retail public who have bought, and gold and silver has gone up this much. And it's not just in India. In international markets, gold have gone up. $2,000 per ounce is now over $4,000 per ounce. So in international market, gold has doubled in last 1.5 to 2 years, if I am not wrong. So what I want to tell you, and same with silver. So what I want to tell very clear, gold and silver has not gone up in India. It's an international scenario. It has happened not because of the public retail people buying gold and silver. It has happened because of institutions, central banks, and de-dollarization, which has made dollars to get out of storage value. No one will sell all their dollars and convert it into gold or silver. It is the percentage. They have reduced the dollar as a storage value, and they have increased gold and silver instead of dollars. And this has led to this big move. So I am saying, even you can't expect a sharp fall in gold and silver, because it is not the retail public who has bought, it is the institution and central banks who have bought. So I am expecting correction in gold and silver, but that may not be 40%, 50% kind of a fall, but some more correction from the peak. A 4 and 5% kind of a correction is not a correction at all. So some more correction is there, but only thing I can tell you is gold and silver, this is not the time to buy. But don't expect a big sharp move downside on gold and silver like a 40-50%. But yes, you will see a decent correction in gold and silver. This is definitely not the time to buy for gold and silver as an investment.
Okay, clear view there. It is going to be equities all the way in the new Samwat year. vis-a-vis gold and silver that might give you negative returns after the sharp rally that has already taken place over the last couple of years, and therefore this is the time to focus largely on your equities in your investment portfolio. Now when we talk about equities, within the large caps, mid caps and small caps, where should the money go, Rudra, and how should one really look at, since you did say that mid and small caps may outperform, what's the best way to approach it? Should one go with absolute stock specific moves as something that has played out largely in the current Samwat year, or do you think even sectorally some mid and small caps can do well?
Sakshi, very clearly, if someone watches our Diwali show for half an hour, we have discussed so many stocks, over 20 stocks you will get. And I know how difficult it was for you to get some stock names from the previous speaker who was there on the show. And even one stock name, you are finding it so difficult. But Rudra has given 20 plus stock names. And I told Paytm so many times. I told about the new age e-commerce platform stocks which will do good, and I also spoke about PSU banks. Already you saw decent rally in PSU banks. I also spoke about metals which will shine very well, and you have also seen move there. Today we have spoken about IT, and yes, there is already a good move. We have spoken about tier 2, tier 3 private banks. Yes, stock names I have told. So you are getting so many names there. So if you want me to say, Rudra, for the benefit of our viewers only today, one, they have to watch our previous last 2 episodes, and I've also put that on my social media and Twitter. And second, what I have to tell people is, if you have not watched that, for the benefit of those guys, I'll again repeat the sector. New age platform stocks will do very good. PSU banks will do good. IT will do very good from now on. And even for that matter, metals will do very good. So we have a lot of stock names in areas, and I've spoken about Paytm. I've spoken about even stocks like Swiggy, Eternal, and in fact Nykaa. I've also spoken about metals where it is your Hindalco's, National Aluminium, Jindal Steel, JSW Steel, Vedanta. I've also spoken about PSU banks where you have PNB, Canara Bank, or you have for that matter Bank of India, SBI. I've also spoken about tier 2, tier 3 smaller private banks where you can look at RBL Bank, you can look at Federal Bank which looks good. You can even look at City Union Bank, and after that we have spoken about IT, where I've spoken about stocks like Coforge. I've spoken about Persistent System. I've spoken about even today Infosys. We have spoken about all these lists just coming out from Rudra's head, and so many names. We have given so much, but also after so much of information straight, I have to also tell, I and my clients and my family directly, indirectly, have all exposures to all the sectors and stocks what I have spoken. And let me tell you, Rudra's money is always there where his mouth and his sector and stocks are there.
Absolutely. So there you have it, a long list of sectors, a long list of stocks for everybody who's starting their portfolio making today, wanting to rejig their portfolios. Those are the key sectors and names that you could definitely be looking at. Since you talked about the online new age platforms, there's also a report today on Urban Company, the recently listed stock. I just wanted to mark that out. Goldman Sachs has initiated coverage with a neutral rating, a target price of 140, believing that there could be a 24% revenue CAGR growth over FY25 to FY30, and there could be a 35% EBITDA CAGR growth as well for India services. And they also believe that the strength of the business model can actually take the stock higher. The outlook is already reflected in the company's premium, is there what they believe in the valuations that we are seeing already. The company is trading at 9 times FY28 estimated EV to sales and 64 times FY28 EV to EBITDA. And both are material premium to the internet peers that there are currently, though broader in line with the peers on a growth adjusted basis at this point in time as well. Currently the stock is at 154, so the target price is lower there, but they've initiated their coverage, hoping that the company is likely to post higher growth over the next couple of years as well. So that's something that I just wanted to mark out for you. Rudra, would you be able to mark out any preferred list of or in order of preference the new age technology stocks that you track?
Definitely avoid this stock, and I don't personally track what you are talking about, Sakshi, and over 6,000 plus stocks. So Urban Company is one of those stocks which I may not track.
Okay.
So for me, let me make it very clear. If you want to be in this new age and platform kind of a sector, and my priority list there definitely starts with Paytm. So that will be the first stock on my list from this particular sector. And yes, Nykaa will do very good even from here. And Eternal, no doubt, when it was below 100 two-digit stock, it was a mouth-watering buy. Paytm, again, when it was at 400, 500, mouth-watering buy. These are all good turnaround stories, and they have performed very well. But then I can tell you, even from here, you can get good returns in Paytm. You can expect good, decent returns in even Nykaa, even Eternal, Swiggy. So this will be the choice what I will be picking up, and even Delivery. So that is another stock which can even do good from here. So 5 stocks, if you have to ask me from this particular sector, so it will be Paytm, Nykaa, Eternal, Swiggy, Delivery.
Perfect. So 5 stocks from the new age tech basket that you can definitely look at. But Paytm is the top, stock preferred by Rudra, and he's been marking that for us for many sessions now, and that's something that he continues to believe big on. 9:46. Let's quickly look at the first half an hour as to how it is panned out and where we are at. 26,080, 211 points higher in trade as far as the Nifty is concerned. So we are still hovering near the high point of the day. Rudra, to you, on day one of the new Samwat, we have finally seen 26,000. And this is for the first time in 2025 calendar year that we have seen this level come in, and therefore I want to start off, since this is the day one of the new Samwat year, where do you see the Nifty levels by the end of this Samwat?
So for me, as I told you already, Sakshi, I expect a 20 to 30% kind of a return from here for this Samwat to next Samwat. Already we are at that all-time high levels, and so if you just calculate 20% as a minimum return at index level, which is very good, and 20% is at least 3 times your bank FD return, and from current levels, if you add that, surely we should cross 30,000, 32,000 level. So that is where you can see Nifty going, and definitely much more short covering will come in Nifty, because even now FIIs are short to the extent of 81%, if I am not wrong. It is only 19% long and 81% short. So now closer to the expiry, more short covering can come. And I'm not saying you should short here the market, but what I'm telling you is you will be a bit late if you are buying here. But then still I am bullish on this market. If you are having long position, definitely hold on. This is not a market to short. FII still have 82% short before today's start of market, and they will still, if I'm not wrong, they have 1,36,000 contracts short in Nifty, and all these statistics tells to me that still the move on the upside is still there, and market will still go up. But only thing is, this is not the time where you go and buy a call option out of the money. And let me tell you, when market was at 24,600, I was thumping the table and I was telling this market will hit all-time high before December. People were laughing, and I said, okay, I might be wrong, but market definitely proved me wrong, because I was thinking before December it will come, and people were laughing at me, but it happened in October itself, which I never expected. So what I want to tell you very clear is 20 to 30% kind of an index return from this Samwat to next Samwat. IT will outperform, and let me tell you, Nifty will outperform Bank Nifty. And as of now, this is not the time to buy ICICI, HDFC banks of the world. This is the time to buy the IT sector, where you might, if you want more safety and you want lesser volatility, then yes, go with your TCS and Infosys. But if you are ready to take some amount of risk, then look at stocks like Coforge, Persistent System, Tech Mahindra, and Oracle Financial. So these are all stocks which you can go into, and you have valuation comfort in IT, and now you have the Trump issues getting away, and that will definitely support IT as a sector. And mid and small cap, which has not performed till now, yes, it will perform, but it will have a lag effect. Money will always first flow into larger cap. First, always your Bank Nifty will perform. And I've even seen a lot of memes and these WhatsApp messages showing that only Nifty is going up, Bank Nifty is going up, but not your portfolio. And most of these portfolios are all into broader market, mid and small cap, and they will also perform. But do understand, first money will not flow into mid and small cap. Money will first flow into large cap, and with a lag effect, yes, it will flow later into the broader market. You should have patience to hold on, and there will be a time when your broader market, mid and small cap, will start performing well, and that is when Nifty and Bank Nifty will take some more rest.
Fantastic comment there, Rudra. So you started off by saying that you are not just bullish but super duper bullish on equities for this new Samwat year, and you end by saying that 30,000 and 32,000 also cannot be ruled out when we look at the kind of Nifty levels that we could be seeing by the end of this Samwat year, which is 20 to 30% higher and even more higher than those levels from the current levels that we are at. And Nifty is likely to outperform the Nifty Bank, and there is also going to be outperformance coming in from the mid caps and small caps, several sectors and stocks that you marked out for all our viewers to take note of very, very clearly. Rudra, thank you so much for being with us on day one of the new Samwat year.
Actually,
like always. Yes.
One last comment. Today I made a tweet and it will help our retail public, and I'm just reading it out. It says, today saying markets will hit all-time high is very easy, and telling why market has hit all-time high is much more easy. But then money can never be made by knowing the why or knowing all the stories. Money can only be made by calling the markets through right research early, and money can only be made with hard work, with skill and efforts, and finally with God's grace. All three is required, and I wish everyone a very, very happy Deepavali, and I want each and everyone not to repeat the same mistakes what you have done before, but do new mistakes. And there is lot of opportunity to make money in market. Correct your mistakes early, and tons of wealth is always ahead, and big opportunity of life is always ahead of us. It is never at the past, and always the view at the top of the mountain is the most beautiful view. But that is a lonely place, and you can't take everyone who have started climbing the mountain. But if you are sure to have your goal done, and if you want to be at the top of the mountain to get the beautiful view, then you have to walk the lonely path.
All right, so pearls of wisdom being shared by Rudra. Thank you so much as always for being with us and for sharing with such clarity what you truly believe in when it comes to the strategies in the markets, and for having your clear research backing that thought as well. We wish you well for this new Samwat year, and of course we will continue to catch up more often with you to seek all your insights on the markets through this new year as well. Thank you so much, Rudra.
All God's grace. Thank you so much. Hari Om.
All right, viewers, let's look at the markets, towards the end of the morning session of market today, 0.7% higher, 26,000. We are holding on to that. 192 points higher in trade. Let's see how this session really pans out. And of course, we will of course speak to a lot of market experts and of course get you all the insights as to how should you be devising your strategies for this new Samwat year. Stay tuned with us on Business Today Television throughout the day today.